Yo, what's good? It's your bro Lo, and I'm bringing you guys another saucy trading video today. I'm just gonna go over order blocks for the basic people, what are order blocks, how to find them, and for the more advanced people that's in SMC, how do I find the most probable ones, and how do I which ones do I rely the most on. So before I get into the video, just know that I'm not a financial advisor. I'm just your regular trader, regular guy giving you guys not financial advice. So if you go smack an old lady for $2, I have no power over that. That's your own financial decision. So with that being said, let's get right into the video. So I just want to draw up a few models real quick. Well, not a few, just this model real quick right here. So let's just go ahead and do that. All right, boom, come down, liquidity, boom. Okay, so this is like almost like your classic market maker, start of a market maker buy model. Now when I'm looking at this, okay, how do I find what are order blocks? Okay, so order blocks are basically the last up close candle. Okay, so a bearish order block is the last up close candle before the down move. Okay, and a bullish order block is the last down close candle before the up move. All right, so it would kind of look something like this: your last up close candle before the down move, and your last down close candle before the up move. And then how you would draw up your zones would be sort of like this. So let me go ahead and draw this up for you guys. This is just for the basic people. I'm gonna do a little quick rundown so you guys will understand. So this would be our bullish order block zone, and this would be our bearish order block zone right here. So you just take the whole up close candle from wick to the body, and you just draw down in time, and whenever price comes into the zone, that's where you would look to want to sell, be a seller. And whenever price will come to this discount, to this bullish order block, that's when you will want to be a buyer. Okay, so let's go ahead and go over a few examples so I can show you guys kind of like what it looks like on the chart, and then we could get into how do I find high probable ones, what are my most high probable ones, and we could go over that. So let's do US 30 real quick, and let's find one on the chart. So when we look at the daily, okay, you can see that this down close candle, right, was our last down close, our lowest down close candle. So with a bullish order block or a bearish order block, you want the order block to be the bulkiest and the lowest down close candle. Okay, so this down candle right here would be your bullish order block. Now inside of there, sitting right next to it, is a smaller order block inside of ICT would call this a proportion block. This is basically an order block inside of an order block, basically, in short. All right, so he would call this a proportion block, and this is how people would refine their stuff. So what you would do is draw this out. This whole, you could do the body, or you could do the wick, depending on if the wick is very long and the body is resting down below. I'll draw out the body more than the wick whenever I'm drawing out my order blocks. And then you can see on a 4-hour time frame, you can see how you have this down candle right here that took out this low right here. Okay, so you could draw that down candle up right there. Now inside of there, you have down candles before the up moves, which you can use to refine your so like say if you was to take a buy right here and you put your stop loss here, you would have a wider stop. So instead of doing that, you could refine it and look for bullish order blocks inside of here, basically proportion blocks inside of this order block to refine your stops. But just know that price can come all the way deep, take out this, and like still respect this down candle right here, because this is your true order block right here. Okay, same to the upside. You can see that when price reacted to this, it created a down close candle before the up move. So this whole candle would be your bullish order block. All right, potential bullish order block. Let's look over here. You can see these two consecutive down close candles right here before this up move. This would be two consecutive down close candles would be a bullish order block. Okay, now when you look here, this is your bearish order block, up candle before the down move. This will be the highest up close candle. Okay, this will be your bearish order block. All right, this would have been a bearish order block right here if we were right here with price. Okay, and price was to come up, we would have expected this to hold price, and this would be a bearish order block inside of here. All right, let's go to the daily just to show one more example. Okay, you see that you have this up candle before the down move, right? This is your bearish order block. All right, you can also have this one as well, but like I said, when price comes into these order blocks, this becomes a proportion block right here. Okay, now one thing I did want to go over real quick is with these bullish order blocks and bearish order blocks, a lot of people, they try to say fresh zones and unmitigated zones. You really don't know what's truly mitigated and what's unmitigated, really. And as well as there's really no such with the algorithm, right? The algorithm doesn't care about what's fresh. All right, that's kind of like supply and demand. What supply and demand teachers try to teach, who kind of like transferred over to SMC, this is what they try to preach is fresh zones. IPTA, the algorithm, they don't care about fresh zones. They remember they remember prices that they worked in. Okay, they have those noted. They will remember these prices, old fair value gaps. You draw them out in time. All right, there's nothing fresh about that. You could draw out a fair value gap in time right here, and you could see it get respected. You know what I mean? Just as an example, I'm not saying it is on the chart, right? With this down close candle right here, you can see price worked in it so much. A lot of people, oh, it's not fresh, it's unmitigated, it's already mitigated, right? IPTA does not care about that. You know what I mean? They note this price right here, and they could come back and reaccumulate in that same area, right? Because it's an area that they have noted. All right, so don't really think of fresh. Don't have that as a block. Now, if you have that in your strategy, right, and it's working out for you, that you only wait for zones that haven't been tapped into, then, and it's working, you're profitable, then keep doing that. But as a new trader, don't think of it like that. All right, because you'll miss out on really good opportunities and very high probable opportunities. All right, so don't make that mistake. For new SMC traders and you know what I'm saying, people who have already been doing it. All right, so how do I find my most high probable order blocks, the ones that I trust? All right, so let's go up and let's draw this out real quick. So whenever I'm looking for an order block, my top 3 things that I search for, which I'm gonna go in and type this out for you guys. Okay, all right, first, what's the draw on price? Okay, where's the draw on liquidity? Anytime, remember guys, anytime that you're doing your analysis, you want to know what price is drawn to. Okay, because you could think that there's order blocks everywhere if you don't have context. All right, so you need context. What's the draw on price? What is your context? All right, what is your context? Are you bullish? Are you bearish? Is there a buy side liquidity pool resting somewhere? Is there a sell side liquidity pool resting somewhere? You think price is trying to get to that to take out stops, or you know what I'm saying? What is the draw on liquidity? What do you think price is trying to get to? What is your context? What is it did it come into a higher time frame order block? You know what I mean? That type of stuff. So what is your context? Okay, keep that up top. All right, number 1. Okay, you want to see for confirmation is a clean displacement. Okay, now this is how you could grade your order blocks. All right, you have these, what makes an order block, right? But all this will not matter if damn, can I not spell? Oh my gosh. All right guys, bear with me. Okay, all of this will not matter, right? None of these rules will not, that I'm about to write, will not matter if you do not have context. All right, I'm gonna keep playing that in your mind. All right, so, all right, clean displacement. 2, usually clean displacements have fair value gaps. All right, you want to find FVGs. All right, FVG. 3, okay, break of structure. All right, that's the most common basic thing that a lot of people are teaching for order blocks. Breaks of structure. Okay, did it take out a high? Did it take out a low? Did it take out liquidity? All right, okay, and number 4, stop hunt, raid, purge, whatever you guys want to call it. Okay, raid, purge, you know, whatever names, okay, you like. All right, so these are the most wait, I put 5, give me 1 second. Okay, these are the 4 that I kind of oh, one more thing. Sorry guys, liquidity, old highs, old lows, any retail patterns that's hovering right around that order block. All right, So these are the main 5 that I really look for whenever I'm trying to put probabilities together, right, and rate the order block. All right, so if you have all 5, this is an A+ order block. All right, it's A+ with context. All right, with where you think, if you think the drawn price is bearish, with the context, right, you will look for a bearish order block with this. Okay, all right, so if you have all 5, it's an A+. You have 3, then you know, you could kind of grade it. Okay, maybe it's like a B, maybe it's a C. You know what I'm saying? Depending on, you know, your market experience with this. All right, because you do have to back test it. All right, so this is what I look for. So mainly, right, let me draw this up for you guys so I can give you guys a visual of it. All right, so mainly, a lot of times what I look for is I look for liquidity to be built up or all high. I look for it to get rated. Okay, whenever you have a down up candle, right, and a down candle after this, right, sometimes I don't need a breaker structure because I know that it's high probable for me to get in with my context once price comes into that order block, right? Right, an order block isn't an order block because it broke structure. That just gives it more confirmation. But you know, once you start getting advanced, then you could do this. But this is what you will wait for. You will look for a stop hunt, and you will look for a clean break lower. Okay, you will look for a break of structure, and then your highest up close candle would be your order block. Now for confluence, right, you would like to see fair value gaps, you know, resting inside of this area. This would be like a proportion block. Your highest up close candle would be like an order block. This would be like a proportion block coming into the area, and then you will want to see some type of build up. Okay, that's what I look for mainly, to get ran and then come into the proportion block. Know that it can wick higher than the proportion block, but you still won't want to see it close below it. Okay, you still want to see it close below it. So yeah, this is what I mainly look for: FVG, clean move, break of structure, and then liquidity built up. Okay, all highs, retail patterns, flag, whatever, liquidity built up, right, to get ran into my order block. And then I'll get my entry here with my stops above here, just in case the wick wants to come higher, and then still close below, and then continue down. Okay, and that's what I look for. All right, same on the sell side, right? You have a raid. These are the best when you have all 4 right here. Okay, now say you didn't get a raid, all right, and then but you have the rest, then you know, you kind of grade it like a B. Okay, this is like a B type order block, you know what I mean, or B type setup, whatever setup you got, right? So that's how I kind of like grade my order blocks, and you know, kind of choose which ones that I think are going to be respected through this. Now here's another thing too. Okay, institutional confluence. I always talk about this confluence. Okay, and now when I say that, let's say we have this, right? Let's draw up this. We have this high get ran, breaker structure. Okay, and then now we would get into, okay, now when we see this high get ran, okay, you see this high get ran, this whole move right here would be a full order block on a higher time frame. All right, so if you would look at this whole move right here would be an order block on a higher time frame. All right, even though you might see a consecutive up candles go up on a smaller time frame, you get that one up candle and then that down move, just know fractally that this whole thing is an up candle. Same on the sell side, right? This whole thing, this whole move from this right here to this low would be a down candle on a higher time frame. So you have that as context, right? Institutional confluence. Now you would get into, okay, I know we're not talking about this, right? I don't want to get too in detail with it, but you would have a breaker sitting right here. All right, now when I say institutional confluence, if there's an order block resting inside of here, right, when price comes up and then it comes inside of that order block, then that's an order block that I would think could hold because it's inside with a breaker and a higher time frame up candle, plus maybe it might be a fair value gap resting inside of it. All right, and then maybe liquidity resting inside of it. So I grade it off of this. All right, in short, there's one more thing that I did forget to add to. Okay, premium and discount. So these are the 7: premium, or discount. So basically all that is the top of the range, you draw a fib to the bottom and you look for the 50% price. When price is above 50, that's in a premium, that's where you would like to sell. On the sell side, if you would like to buy from this range, let's say this was our low to our high, you will want to see price come down below 50, and that would be a discount, right? And above here would be at premium prices. All right, so you want to see your order blocks at premium and discount. Now when you start getting advanced, it depends on the context where the draw is. You'll have intuition to know that you don't want to see price come all the way up to a certain spot, so you wouldn't want to see it come all the way up to a premium. So you would rather use like the order block, you know what I'm saying, the breaker of the swing to come to take sells and then take out the sell side liquidity that's resting, right? And I have an example for you guys on EU, so we could get right into that real quick. So let's get into some examples. All right, cleared all this out real quick. All right, let's go to EU. So in my Telegram, I went over was it gold? Oh, it must have been gold. Sorry guys. Okay, it was gold. Yeah, it was gold. All right, let me make sure I'm recording. So now looking at gold, let me give you a little bit of context, right? Okay, so I see that gold has a swing from this high to this low on the daily, and I know that premium prices are inside of here. Now I know that we're in a discount and we could potentially buy up, because what happened, we took out this low, these lows here, okay, and then we had a displacement higher. Remember those the four things that I look for. I hope you guys got it written down because it kind of disappeared on me. So just go back through the video and just go ahead and write those down. Now you can see how you have a displacement higher, okay, and then you had a break above. Now the example that I was talking about with institutional confluence, right? Institutional confluence. All right, you see how price came down. Like I said, when you get advanced, you wouldn't really see this as you wouldn't really want to see it come all the way down here, because the liquidity is resting above here, and you know, you have a breaker and then you have a order block resting inside of here. All right, so just remember that even right now, even though if you're not advanced, this is what you want to look for. So you have this breaker, okay, and then you have a 30-minute order block resting inside of there. So I would expect this to hold. In my Telegram journal, this is the analysis that I gave you guys, that I gave the people that's in my Telegram. Why didn't I draw it out for it to come all the way down here? Because I didn't expect it to. I really didn't expect it to. If I did want to see it come down here, I would have to see some type of liquidity built up for it to come into here, okay? And then you can see that it never came into a discount. Discount is right at this 50. You know what I mean? So that's what I'm talking about. But right now, that's what you want to focus. Those 7 things, that's what you want to focus on. And once you know you start getting advanced, and you know you want to see price get to a certain draw, you kind of have intuition. You kind of understand what price does very well, institutional order flow. Then you won't have to play with the premiums and the discounts, like the extremes. You know what I'm saying? You don't have to play off the extremes. I knew that price most likely when I came down here. But if it did, you know, this would be your bullish order block. Okay, so that was a quick example. Also, one more thing that I do is I look for price to come into these areas and create a down close candle, and then a up close candle, and that creates a fresh order block. All right, so let me go ahead and show you guys what I mean by that real quick, and then that would be the end of this. All right, so this is gonna be a very nice thing that I'm about to give you guys. All right, so give me 1 second. So I'm gonna give you guys this example right here. Okay, this is gonna help you guys with really trusting your order blocks. All right, I gave you the 7, but here's another quick lesson real quick. Okay, let's just say this right here. Okay, now we know that we're bearish right now. Okay, when price takes out this low, let's say price took out this low, and then we see this shift right here, this break of structure. Okay, we know that we could possibly start getting some bullishness, right? All right, so when price pulls back right here, and it plays off this order block or this breaker or whatever, and then you have this displacement higher, we have a shift in delivery. Okay, we start to have a shift in delivery. We could possibly start taking out this high depending on context and come up to this zone above here, so this area right here. Okay, we could possibly get up there. So once you have that shift in delivery, you can start to like be like, okay, down close candles should start to be respected. Okay, so any down close candle inside of here, once this broke, you could, if you got some you know, if you have like a more experience, then you know you could take this market maker reversal right here. But if you don't, then you go wait for the shift in structure, right? The shift in delivery. All right, so when you have this, you can expect every down close candle to be respected. So once price comes into here, right, this is one thing that I do look for and I do like to see, and how I know what order blocks to trust. If there's a down close candle, all right, that gets created inside of here, okay, and then it breaks above after all this happened, okay, and it breaks above like this, and you have this right here, like your basic engulfing or your three pattern, where you have like a down close candle, then a very small up close down close candle right here, and then an up close candle, your three variation pattern. It's kind of sort of like that, right? You're creating a fresh bullish order block. So once price does this, it can even do it in here once you get experience, or say this is just like a confirmation that you guys can use. If price comes into here and it does this, it's creating a fresh order block, and you can expect this to hold as long as your context is in line, okay, with where the objective is. All right, so once we have that right there, you can expect, like I was saying, I said that over and over, you can expect this to hold. Okay, so any retracement back into this order block right here, you expect this down close candle to hold. You could be a buyer, all right, which it stops below, and then it could go to whatever your target. Once more down close candles are created, right, this would be like a down close candle right here, right, you can expect this to hold until you get to your draw on liquidity, and then the shift in delivery might happen. You know what I'm saying? Whatever happens through there, and then you don't expect every down close candle to hold. Okay, so that's something I just want to plant in your mind to kind of like get you in line with what order flow does and how you can really trust order blocks. All right, this is just a little example. All right, so I'm gonna go over a live example on AUD USD real quick, and we could get right into that. All right, let's go to AUD USD. All right, so this is the last thing I want to go over. Okay, so let's go over a little bit of context. All right, so we came into this weekly order block right here. Okay, well, actually, let's start off up here. Okay, so this is where our shift in delivery happened. We came up into a up close candle. Here's a bearish order block right here, so you would draw that out in time. All right, your highest up close candle, it wicked into it, and this is what I'm talking about. You see how when price wicked into this, right, you have this up candle right here, and then you have a shift in delivery here. So you can expect this up candle to hold as soon as this down close candle happens. So like, say none of this price action happened right here. Let's say you just had this up candle right here, this wick up and this wick down. You can expect this up candle to hold, okay, to continue down. All right, when you're bearish and you know that there's, okay, look at this, you have this double bottom right here, so this can be a draw. You may have some FVG inside of here. This will be your objective, so you expect this down close candle to hold. Now let's say you wanted to see a shift, right? So you have this down close candle hold, we came back up, you had a shift in delivery, right? From this up, you will expect this down close candle to hold. All right, even though it broke through it, don't be like, don't let one bad apple spoil it. All right, because it still held this up close candle right here. As you can see, don't worry about if the candles, if they close, okay, and if they wicked above it. All right, as long as they don't close above, then it's pretty valid. But if we close above this order block, then it's not as valid no more. Now you can see right here, look, you have this up move right here, and then you have this down move. Once you have an up candle printed inside of another up candle, the next candle you want to start seeing displacement. So after you see this up candle get printed right here, and we came up, you want to start seeing displacement. Now you can see how this up candle was formed, and then it broke below this low. Okay, it didn't close, right? You would really want to see it close a lot more than it just wick, right? But you can see how once this happened right here, you can expect this close candle to hold, right? You shouldn't expect it to really go above here, or it can start being low probable, right? And then you have a break. Okay, look at this. You have an close candle formed. We broke below it right here. Okay, right here, and then we came up inside of it. You expect this to hold, and that up close candle to hold. Okay, we broke down, we came up, wicked into it, start to see a displacement. You expect this up close candle to hold. It didn't hold. All right, came back into here. Like I said, just train yourself to kind of see it like this. You know what I mean? To kind of expect up close candles to hold once we do our draw, right? So we have two bad apples that got spoiled. Okay, came up. Okay, let's look at this. You have this up close candle, right? The next down close candle broke below, so you expect this up move, this up close candle to hold now until we get to our draws on liquidity. All right, so I want to go into detail on this little swing right here, just to kind of give you guys a little bit more insight. Okay, so let's go out a little bit. Okay, so I'm on the 4-hour time frame. All right, we know that we came into that weekly order block, and then we started having a displacement lower. Okay, so let's see what happened right here. Okay, look, we have our stop hunt right here, and then we have this up candle. Once this up candle is broken, this is our highest up close candle. Once this is broken, you expect this up candle to hold. And this is what I mean when you have market experience, when you have experience with this, and you know you have the context and you're really good with this, you won't have to wait for that break of structure. You'll know that this is now your bearish order block, and you can enter a little bit early. But right now, I don't want you guys shouldn't focus on that. Even though I'm showing you guys this, once you start getting good at this and you start seeing like how you could just take it like this, then you know you already know how to do this because you've seen this video. All right, so you will wait, right? Wait for the break of structure. All right, and then you have this down move. All right, you have this up close candle right here. Once it broke, price came into it, held it. All right, you have this up close candle, right? Shift down. Okay, you expect this up close candle. You have two consecutive up close candles right here. So on maybe an 8-hour, this would be a full up close candle order block. Remember, like I said, a consecutive up move is just a higher time frame order block, right? This whole up move right here is just a higher time frame order block. When you think fractally in the market, and every order block has a breaker. All right, so you have this two up close candles. I respected that right here. Fair value gap, bodies. Look at the bodies. Here and here. Okay, look at the bodies. Fair value gap, two consecutive up close candles. Respect. Okay, once price came into here and broke down, you could expect this up close candle to hold, right? Which it did kind of wick above a little bit, but it still closed inside of it. All right, so that's why you don't really have tight stop losses like that. All right, once it broke down, you have two consecutive up candles right here. Two consecutive up close candles right here. You can see how this 4-hour came right into it, right? Let's look at the daily real quick. Okay, so here's that fair value gap on the 4-hour. You can see how this was an up close candle that it came into, broke down. Here's an up close candle right here. Price did not come into that. That's fine. All right, we broke down, two consecutive up close candles. You expect this two consecutive up close candles to hold. Once we come into that, which we did, we came into the open here. Okay, we broke down. Look, up close candle. After we broke this, right, came back in it. Look at the wick, how it wicked into it, broke down. Okay, look, another up close candle, wicked into it, broke down. So this is how you study it. This is how you really study, you know what I'm saying, until you get to your draw on liquidity, which was these lows right here, and then this double bottom right here. All right, so that's how you really train yourself, and this is how I take a lot of my entries. whenever I want more confirmation, I'll wait for price to come into a order block, right? So say like this is like the weekly, excuse me. Say if this is like the weekly, right? I'll wait for either the weekly or half of the weekly, half the time frame, right, to see an up close candle come into it, and then a down close candle or the 3 variation pattern come down, and I'll frame my trades off of like, say like this order block right here, this order block. I'll start to frame my trade inside of. All right. Lower time frame, there we go. I'll start to frame a trade inside of here. So once price comes into here, it comes into here like this. This might be a stop point breaker structure on a smaller time frame, but I just know that I'm framing my trade through this. So any fair value gaps inside of here, any institutional confluence inside of here, I'm looking for this up candle to hold. Okay, that's just how my mind sees and how I work around framing my trades. All right, so I hope this video was insightful. I hope you guys enjoyed this. It wasn't too long, and if you guys did, go ahead and share if you share the video, like if you would like, dislike if you would like, you know what I'm saying. I'm fine with those too. Not that fine. But yeah, so I hope you guys enjoy the rest of your day, and I'll see you guys in the next one. Peace.